Hello, everybody. Welcome to today's M&A Advisor virtual event, SPACS Dealmaking. My name is Amanda Jorgensen, Strategic Content Director for the M&A Advisor, and I'll be your host and moderator for today's half-day virtual event. On behalf of the M&A Advisor, I'm excited to welcome you to today's virtual program, SPACS Dealmaking. As you can see, we have a tremendous lineup of speakers today. It's sure to be a fantastic program. Over the next few hours, we'll be hearing from Monroe Capital, Winston & Strawn, Vogel Group, Swiss Financiers, and Gallagher, amongst many others, as we talk about all things SPAC, from determining when a SPAC is your best path to IPO, as well as understanding SPAC fundamentals and mitigating risk throughout the SPAC life cycle, to de-SPACing, as well as future trends in SPACs and everything in between. This program is for M&A deal makers who are already experienced or those deal makers thinking about getting involved in the SPAC ecosystem. Now, all of you in the audience will be able to ask your presenters questions through the Q&A box found at the bottom of your screen. Please type your questions in as they come to you, as we'll try to get to as many questions as possible, and I'll be sure to read them off to each speaker after their presentation. During this event, you're in listen-only mode. That means that your line is muted, so you cannot hear the other participants or any background noise. You may be listening to the event today on your computer speakers or on your phone line. Depending on the speed of your internet connection, you may experience breaks in your audio broadcast over the computer. If you experience any audio trouble on the computer, we recommend dialing in on the phone line for the best and most reliable audio connection. I encourage you to submit your questions during each presentation so we can get started with the Q&A session immediately following each speaker during this virtual event. To do so, please send them into the Q&A box at the bottom of your screen. If you have any technical questions, please enter those into the chat box and we'll do our best to help you with those. So once again, please use the Q&A box for presenter questions and the chat box for your technical questions. With that, I'd like to introduce the chairman of our SPACS Dealmaking Symposium, Roger Aguinaldo. Not only is Roger the founder of the M&A Advisor, but he has extensive experience in SPACS dealmaking. Over the past 7 years, Roger has been involved with 5 SPAC raises of over $4 billion and 3 de-SPACs of nearly $9 billion, and a take private, which turned a 3.2 net multiple of invested capital to investors, producing a nearly $4 billion profit for investors. With over 30 years of M&A and private equity experience, we could think of no better chair for our inaugural SPACS dealmaking event than our founder, Roger Aguinaldo. Roger, over to you.
Thank you, Amanda. Good afternoon, and thank you all for joining us in our series of exciting, informative, and important virtual programs for the M&A Advisor community. This one in particular, SPACS Dealmaking, is one that I am personally familiar with. The M&A Advisor was founded in 1998 and was the first dedicated media company to offer insights and intelligence on mergers and acquisitions. Today, we are one of the world's premier think tank, events, and leadership organizations serving the M&A, restructuring, and corporate finance world. For the past several years, M&A Advisor has been a certified minority business enterprise. We have quite a few upcoming live physical events that we hope you will join us in person. On September 29th, we're hosting our in-person events for our annual summits and awards galas for the turnaround in the distressed investing communities. We really hope to see you at some of these programs. Please be sure to check out the website for continual updates to these events and speaker lineups. And if you are interested in becoming a speaker, feel free to reach out to us as well as we consider all speaker recommendations and outreach. This fall, I'm excited to announce that the M&A Advisor will be launching an online community in partnership with the leading online community that caters to the venture capital industry. The focus of this community is fulfilling unmet needs. We're not necessarily looking to create a social network or a LinkedIn for M&A, but a community platform that solves our problems in deal making. Our initial focus will be fourfold: connecting buyers and sellers of companies, introducing investors and fund managers, creating a marketplace for services, and facilitating a mentorship program for career development. If anyone is interested in participating in some pilot programs for this, please do reach out to us. I'm truly excited about the upcoming events and online community that I'm hoping will make a difference for our industry. Please do join us in our adventure. Now, let's get to the topic at hand, SPACS deal making. As Amanda mentioned before, since 2005, nearly 7 years ago, I've been involved as a senior advisor to a private investment firm focused on permanent capital. SPACs were a way for us to create a permanent capital vehicle that was publicly traded. I want to provide a quick overview of the SPACs fundraising marketplace. And while most of the speakers will be presenting an enthusiastic viewpoint of SPACs, let's be realistic. There are some challenges to this industry. So let me share my screen here. And as you can see, there is a ripe opportunity in this competitive SPAC market. You could see just on this chart here, the dramatic growth with 13 issues raised, 3.5 in 2016, which is sort of a blip, to over 83.4 in 2020. And as of yesterday, 415 issues have been raised of 121.8 billion, accounting for more than 62% of the IPOs issued. And another 291 SPACs have filed with 67.8 billion in the IPO pipeline. Now, if all of those in the IPO pipeline happen, yeah, you're looking at perhaps double or even almost 2.5 times what was raised in all 2020. Currently, there are 439 SPACs with $131.1 billion seeking an acquisition. And what's interesting is that of the 439 SPACs, approximately 71% of the sponsors are first-time SPACs. And more than half of those are not necessarily consummate deal makers. They're operators or people who are celebrities, but not necessarily deal makers. Prior to 2019, before this sort of, dramatic rise, approximately 23% of all SPACs have liquidated, i.e. they couldn't find an acquisition and had to return the capital. So keep that in mind when sort of the half-life of a lot of these SPACs is coming this fall. So what's the challenge? SPACs are really a deficient vehicle in acquiring a very high quality company. There are shortcomings to the SPAC structure. The sponsor promote shares of 20% is a very expensive option with sponsors who actually do not provide value to the selling shareholders or even to the company. The acquisition, yes, is subject to a shareholder vote, and the shareholders have the ability to redeem cash raised in the trust even after the merger vote. So even though they vote for the merger, they don't necessarily have to have their cash stay in the trust to fund the acquisition. And most hedge funds that are the initial investors earn at the IPO 1/5, and even today I'm hearing a full warrant, and they keep those free warrants even if they redeem their shares. And if no forward purchase agreement or backstop redemption capital is available, then additional proceeds need to be raised to handle these challenges. And as I said, there is deal uncertainty for the seller of the company. More often a higher valuation than a private deal or a regular way IPO needs to incentivize the selling shareholder in order to go to the SPAC. PIPE proceeds, even more PIPE proceeds, the public private investment in public equity, more equity may need to be raised if the seller wants to sell more than rolling the equity. Shares price trading down lowers the value of seller shares, and there is, with the time period, most SPACs have anywhere between 18 months to 2 years. Some of them that have been raised in the past year only had 12 months in their S1s. There is pressure and high incentive to do any deal, even a bad one. So SPACs overall, even today, have had mixed performance after the de-SPAC. Typically, the IPO price is $10 per share, and many of the SPACs are trading below their IPO price. Now, we talked a lot about the PIPE investors. Many of the PIPE investors, who are usually long-only buy-side investors, have limited bandwidth and low visibility. Although they have perhaps a little bit more visibility than in an IPO, it's still an outside-in presentation with little to no firsthand underwriting being offered to the PIPE investor. And with over $131 billion in SPACs outstanding, the PIPE investors do not have the bandwidth to responsibly evaluate these deals, putting a lot of these SPAC sponsors, at risk of losing transactions and valuable time. So those are all the sort of the challenges of the SPACs, but I wanted to make sure we offered a balanced viewpoint, because now we're going to talk about how you can overcome these challenges, how you can land a high quality company, how you can partner with a SPAC seller or even a company in order to get the deal done. So with that, I'm going to turn it over to Amanda as I look forward to the rest of this presentation.
Great, thanks so much, Roger, and a great way to for a nice overview to set up the rest of the event. Now, before I kick things off, everyone, I just want to remind you one more time to please submit your questions to the presenters in the Q&A box at the bottom of your page, as we want to make sure we can address as many questions and issues as we can throughout the program. You're able to access all of our speakers' bios on the event website, and in my closing remarks, I'll give you full information as how you'll be able to access all the content from today's event. Most of the slide decks will be able to be shared or connected with you'll be able to connect with one of the speakers to be able to get their slides.